afternoon, this is Scotty with the Gifford Group, and I just wanted to run you through our calculator that we recently made for capital gains, as we get a lot of questions about what my capital gains going to do when I sell the home, as we've seen home prices have increased lately, and that's a question we've been getting a lot lately. So you go to our capital gains calculator on the giffordgroup.net. It's going to bring up our calculator. So and I have included tax rates for the 2022 tax years down here. So most people are going to fall in that 15% long-term capital gains range. So this is a little bit different than your actual, tax bracket, because anything you hold as an investment longer than 12 months is going to fall into the long-term capital gains, whether that be a stock, or in this case, we're talking about real estate specifically. So, and then we're going to be talking about the real estate exclusion you get for being single and married. So you get a $250,000 exclusion if you're an individual, and a $500,000 exclusion if you are married, for your long-term capital gains on real estate if you've owned the home in the last 2 of the last 5 years. And that doesn't have to be concurrently. You could have owned the home 1 year, then moved out for 3 years, and then moved back in for 1 year. But as long as you've been in that home and using it as your primary residence during that 2 to the 5, and you're selling it now as your primary residence, the exclusion is going to apply to you. So like I say, most people are going to fall in the 15% tax bracket, but I allow you to pick your tax bracket up here. And let's see, let's just run through a scenario. So someone has been in the, let's say $250,000 when they bought the home, and that's going to be the original basis that they're going to use. And now we are allowed to subtract any improvements you made to the home along the way. But if you scroll down, we can see some examples of what might count as improvements. You can count on, you've added some new duct work, you replaced the plumbing, you've added a garage, you've upgraded or replaced your AC system, added a new roof. Those are all going to be improvements to the home, not appliances or anything else like that. But say that they did $25,000 in upgrades to the home since they've been in it, and now the market's pretty hot, and now the average price in Houston is about $425, and so they're saying, let's say they're selling for the average. That's going to be their sales price. Now we do get to exclude any costs associated with selling the home, and usually, typically you run about 6% for realtor fees, and then maybe 1 or 2% costs associated with closing cost, which would be title insurance, and all the title fees that go along with that. So I have it set up for about 7.5%. You can adjust that if you want, but I think 7.5 is a good guesstimate for a lot of people. So it shows you right there the cost associated with selling based on the sales price would be about $31,000. Now, if you're single, like I said, you get the $250,000 exclusion if you've owned the home last 2 to 5 years. So if say if you only owned the home 1 year, your long-term capital gains is going to be based on this 118, which is going to be the cost associated with the sales price minus the cost associated with selling, minus any improvements, minus the original basis. So that's how much they've been made in profit and walking away with. And so their long-term capital gains would be almost, it's $17,000, 719. So if they did live in the home the last 2 to 5 years, though, they would get that exclusion, which then would make, they get the $250,000 exclusion, which means their capital gains would be $0. Now let's run through a scenario where they have made a little bit higher price home. Maybe they bought the home for $450,000, and they've lived in the home quite a while. So they made some improvements. Maybe they put in a pool and then fixed the AC in the roof. But now the market's really hot, and they're selling their home for $1.2 million. And maybe they're getting a little bit of discount on some of that, and say they're at 7%. So now their cost associated with selling is $84,000. You can see if they're a single person and they have their exclusion, so their capital gains, they've walked away with $586,000 profit. So they get the 250 exclusion, which leaves them 336, and then based on their 15% tax bracket, they're going to be paying $50,000 and some change in capital gains. Now, if they were married, they're going to get the $500,000 exclusion, which then has them only owing $86,000 in long-term capital gains, and based on their 15% tax bracket, it's going to put them down owing about close to about $13,000 in long-term capital gains. Now, of course, this is just an estimate. You want to get your CPA to make sure that all of these numbers are right, and make sure you have included all your cost of improvements and on your costs associated with selling. But hopefully this gives you a pretty good estimate of those capital gains, which you're looking at, and knowing if you need to worry about them or not, as a quick calculation on the back of the napkin kind of thing, with the calculator doing most of the work for you. Now we can run through a quick scenario. If they did, maybe they're only selling their home for $550 because there's an area that hasn't been appreciated. It does take into account that if you have a loss in there, then you can actually record only a $3,000 loss per year, and you carry that forward. But at least tells you that, like, hey, it does take into play if you actually have a loss. Now, we do have some other information about for the capital gains down below to read on if you want at thegiffordgroup.net. And hopefully this answers your questions and hopefully helps you realize if you have any capital gains or not. If you are in the Houston market and thinking about selling, you can always reach out to us at thegiffordgroup.net. And my email is at scotty@thegiffordgroup.net or amber@thegiffordgroup.net. So thanks so much for watching, and we hope you have a great day.